Right now, you have to be very selective in what you own. Is one of the most important commodities to own, in my view.
We do have the Nasdaq that's currently super overvalued.
I don't think we've ever seen this before, ever.
No,
Meet Tavi Costa, macro strategist at Crescat Capital and a leading voice in macro investing. With a sharp eye on global markets, he's predicted key shifts in inflation, debt cycles, and commodities. From economic cracks to major opportunities in gold and Bitcoin, Tavi's insights are essential for navigating today's markets. He often shares his views on national television and his Twitter page.
I mean, I think people are ignoring the fact that valuations are extremely high, and valuations are higher than 1929. I mean, that's insane.
China needs to focus on the internal markets rather than the external markets.
It's a tough game, and this is very unsustainable.
There's one scenario that I do not hear.
I think the main reason for that is
Tavi, it is 2025 and, quote, "This is an opportune moment to reassess and consider reallocating capital into areas that have been overlooked." Where should we look?
I think there's no shortage of places to look. I think we've seen a concentration of capital that has been basically attracted by mega cap companies and U.S. companies at first. So, the entire milkshake theory, I guess, from Brent Johnson has been playing out perfectly, of which dollars have been, or capital have been sucked into U.S. dollars and also into U.S. equities, and which is creating a lot of dislocation in terms of valuations in other things that have been neglected for a long time. And so all the other parts of the world that I believe are incredibly attractive when it comes to value proposition of investing, even from a developed world. You can look at Japanese companies, you can look at European companies, but also emerging markets, which have been for a long time ignored. Those are the ones that actually get me really excited, because when you see the turn of the dollar, when the dollar really starts to roll over and have a long-term declining trend, which I think we're at the beginning of one, that's exactly when you want to be investing in places outside of the U.S. And I think we're in, as I said, on the verge of that. And those that understand those markets very well are going to do well, in my view. Now, the inflationary aspect of this entire cycle is what makes things a little bit trickier. The fact that we're seeing, the policies that we've seen after COVID, which in my view really unleashed inflation in a way that we have not experienced since the 1970s or 1940s or 1910s. Those things are very hard to prevent from continuing to expand in the system. And so what it causes usually is that hard assets tend to do very well. And so I'm a big believer that natural resources, which have also been neglected for a long time, are likely to do very well. So hard assets in general, but specifically natural resources. And when you find natural resource companies trading at single digits relative to their earnings or free cash flow, it's remarkable. I mean, that's a great opportunity, in my opinion, because I do think hard assets are going to trade at a much higher price levels. And so you have the growth, you have the value proposition, and all you need to do is check that if the asset is do your due diligence on the asset. And so that's what we've been doing. So I've been trying to acquire mining companies and all sorts of things on the private side. So I think there's no shortage of things to be doing in this world.
So if you, I think a few weeks ago, you posted a chart where you outlined the growth of the US compared to the remainder of the world, which is technically the big influx into the US dollar, through which, for instance, the Japanese yen devalued against the dollar. Multiple currencies have been weaker than the US dollar because everything was sucked into there. Do you expect that we're going to see a rotation taking place where the US stocks can just have a relatively normal correction where emerging markets are going to expand?
I think there's two types of situations. When you look throughout history, when the dollar turns, there's two types of markets that can manifest themselves. I mean, there's the 1985 period when the dollar reached a peak, and we saw a coordinated across central banks act to devalue the dollar. That was one, and that didn't cause a crash. While people talk about 1987, 2 years after, it wasn't really a problematic period for equity markets. It was, any issues we've had were short-lived, and the markets didn't really had a painful moment. Instead, we just saw a natural rebalancing of dollars or capital flowing back into other countries. Japan was one of the biggest beneficiaries of that. But then you have the early 2000s, for instance, which is kind of the opposite of that, which we saw a reckoning moment of where equity markets hit a bubble that burst because of too high valuations. And you certainly have that aspect today. I mean, I think people are ignoring the fact that valuations are extremely high, and valuations are higher than 1929. And so it's not like the markets are cheap. Markets extremely expensive. The only other time markets were as expensive as they are right now was in the early 2000s in the tech bubble. Look, that doesn't mean things are going to crash, but throughout history, we've never seen a period when valuations get this extreme and they just peacefully, without any type of turmoil, just deflate. I mean, that's just not how things have ever worked. But maybe that's the case. I don't know. What I do is instead is to focus on where I think the capital is going to rebalance towards. And like I said, I don't think there's shortage of things where things are going to go to. But it's scary because, when you look at the MSCI index and it puts a 70% weight in U.S. equities, it's a bit absurd what we're seeing. The chart you're referring to is that U.S. equity markets today are worth more than the entire rest of the world when you exclude the U.S. I mean, that's insane. So I think there's something to be said about how extreme we're seeing this American exceptionalism. It's funny to see now with Trump, people are coming out and saying, well, we're going to finally see America, be great again or something along those lines. And it's not that there isn't a lot of optimism about that, but we've been living in a American exceptionalist era that I don't think we've ever lived before. So I'm of the view that leadership is going to change quite drastically, and this is very unsustainable.
I think I agree with that point, and I think the past weeks have shown that the tables are turning slightly, where central banks are urged to actually do something to prevent bigger turmoil or issues with their own country. Like, for instance, China needs to focus on the internal markets rather than the external markets, where also the Bank of Japan is currently rate hiking, which caused the markets to have a slight correction. But it's also pushing the Fed into different decision making than what they initially wanted. How do you see the role of the Fed at this point, not including Trump and his power to try to get the rates lower?
Oh, I think we've had the first phase of the Fed being able to tackle inflation in a large way, which was in 2021 by raising rates. And because the imbalance of how much it costs to pay the debt relative to GDP was very low at that time, enabled the Fed to act with a very aggressive manner. Now that we're paying close to 5% of GDP on interest payments, the Fed is not in a position that it can do anything really in terms of fighting, inflation or raising rates significantly from here. So it's in a position that it has to do the opposite. It has to suppress rates and find reasons to justify why it needs to be cutting rates. And what I think it's important here as well is that, you look at 2-year yields, for instance, they're pricing in one rate cut in 2 years from now. I don't agree with that at all. I actually think that if there was ever a time to be owning 2-year treasuries, I think that time is now. I think the 2-year yields are going to fall significantly from here. I don't think that we can sustain the economy at these levels of interest rates, particularly in the short end, because the short end is so important and relevant for the T-bills and all the debt that is being structured in the government side. And so I do think that the short-term rates are going to fall quite significantly from here, and that ultimately has an impact on the dollar as well. The Fed is going to have to be, and regardless of if it's a Fed or it's Trump forcing the Fed's hands, I don't really care. I just think that it's the easiest way to reduce deficits today is to cut interest rates. It's the easiest way. If you want to have deficits like Scott Bessent, the new Treasury Secretary, has been saying, of about 3%, you got to start with the fact that we're paying 5% of GDP on interest payments alone. So, if you get it down to 2%, things have changed quite significantly. So I think that's going to have to be part of the discussion moving forward.
But how much space do they have? Because there is also the central topic surrounding inflation, which just keeps on picking up momentum again. Okay, we had a very good read in December, which was positive, lower than expected, but that's just the news of the day. Inflation is likely going to pick up again. So should the Fed actually do those rate cuts, or are we actually in the markets expecting rate hikes? As in, I've not seen any moment in time where parties are so conflicted on what's going to happen that inflation remains the prime topic, but maybe economic growth is going to change or becomes the general topic and induces the Fed to actually do those rate cuts. How do you see that?
Well, you touch on a point that I think is what makes the whole case for hard assets, which is being in a structurally inflationary environment, which regardless of policy, especially near term, will change the environment in terms of particularly how inflationary forces continue to be infiltrating the system in a large way through the suppression of, look at the commodity space, for instance, right? I mean, if you look at how producers have been not spending enough CapEx on new projects, and so there's going to be a shortage of new supply coming online for the next few years because those things have a duration impact. Then you have the other aspect, which is onshoring. Onshoring is a significant change in the dynamic that also adds to the inflation thesis, of which, it's obviously a lot cheaper to produce something in China. If we're going to be doing this and going above and beyond the cost of that, just for geopolitical reasons to bring it back to our own country in terms of manufacturing, things are going to cost more. And so all these things are going to have and by the way, the construction and the infrastructure needed for AI and the onshoring as well is going to be quite significant, which is going to create this demand for commodities and so forth. And so everything is aligned, in my view, that inflation is likely to stay higher than historical levels. Okay, so if you're of that view, what you're asking is how do they even justify cutting rates in an environment where inflation is rising? it's a tough game. I think people are about to see the Fed, not having to, you know, not having to fight inflation, choosing not to fight inflation because they just simply cannot afford doing so. And this is when, in my view, gold is not trading at sub 3,000, or any other hard asset will be trading at significantly higher levels. And you have to be thinking about this from the perspective of businesses that produce those things, because they are trading at peanuts right now, and their margins are about to be expanded massively. And so it's very interesting setup in my view, and it's going to be exacerbated by other economies that also tend to benefit from those hard assets that usually, when they perform well, those economies tend to perform well, like emerging markets. So everything is kind of linked to the same idea.
I think in the answers that you're providing, there's one scenario that I do not hear. I mean, I hear you talk about the 2000s. I hear you talk about 1985 and 1987. Where would you put 1929 in comparison to the current market?
Because of the concentration of the markets right now. Like if you look at the market cap, mega cap companies, it's reminiscent of the 1929 era, and also the Nifty 50 era. So those are, you have to at least respect that in terms of history. We may say, well, profitability. Well, those companies are profitable too back in those days. It wasn't a profitability issue. It was a valuation problem. So, it's that question. Growth matters and excitement matters, but there's a point in the cycle where growth expectations start to fall short from reality, and prices begin to not be in line with the risk reward that investors are currently taking. And so, in my view, this rotation or this rebalancing, it's already happening. It's just not fully happening, which is normal, by the way. I mean, look at the Indian markets, going up a lot recently, gradually for the last 5 years. Argentinian market also having an incredible last 5 years. Japanese markets having an incredible last 5 years. So European banks are outperforming mega cap companies in the last 2 years. So I think things are starting to show signs of rebalancing overall, and people are not paying attention to this whole potential for onshoring, not just in the U.S. but outside of the U.S. So what if Europe starts to onshore as well? What if Japan starts to onshore as well? It's very, very likely to happen. So I think these markets are historically undervalued relative to the probability of that happening.
Isn't it? It's just like I've been in the crypto markets for 8 years, and there are a lot of references in terms of crowded trades. And it feels like, especially earlier in this week, we had Nvidia tanking based on DeepSeek AI coming around. It just feels like the whole nation is trading the same 5 stocks, while the actual return can be made in outside opportunities outside of those 5. But then I often get this question when it comes to Bitcoin, but perhaps you've got the same for gold, which is we do have the Nasdaq that's currently super overvalued, but also gold is printing new highs at this point. Why is that not being overvalued at this point at all?
I think the main reason for that is if you do one simple calculation, you take NASDAQ and adjust it by money supply, and then you take gold and you adjust by money supply, you're going to find very different picture. One is near all-time lows, which is gold, and Nasdaq is retesting the peak of the early 2000s. So, it's gold has a lot of room for growth relative to monetary dilution and relative to, just think about who are the largest buyers of gold. It are usually central banks, and central banks own about 20% of gold in their balance sheets today. Back in the 1970s or so, late 70s, they used to own close to 75%. So there's a lot of room for that to be increased, and I do think it will increase. It's already increasing in a large way, and unreportedly as well, which is very important. So yeah, I think gold is much more clear path than Nasdaq. Thinking from a risk reward, that's all. It's a great asset to own at times like today. I mean, it's not. I'm not a gold bug. A lot of people try to categorize me as a gold bug. I'm not a gold bug at all. People say to me, "Well, you're young. Why are you dealing with gold? Like, gold has got a." I don't even own gold. I own zero gold in my portfolio. I own things that have leverage to gold. It's a different story. And that's what really attracts me is that, because I see a clear path for gold going to levels that people don't believe will ever happen. And if that's the case, a business that is producing gold at a profit now, what would that look like 5 to 10 years from now? And knowing that history has shown us these companies can print money, essentially, in terms of generating cash flow at the right times of the cycle. So I think that people are dismissing that as an opportunity. That's all. So I like to, to express that view in the market very closely.
A little bit of an outside question, but it feels like you're quite off to the contrary of the crowded trade at this point, which, in order to actually be successful and yield yourself a return, most definitely you need to have a different opinion than a mass. That's clearly true. But in the gold markets, for instance, having a certain view could take time before it starts to play out. How do you like the past few years, for instance, miners haven't been doing well, and they start to wake up, and the entire sentiment is shifting. But how do you handle understanding for yourself that your thesis might be right, but not seeing it follow through?
I think there's parts of that question to answer. Number one, gold prices have done remarkably well. I think that the miners lagging aspect has to do with fundamentals. Number one, and when you're looking at the overall picture of GDX or those kind of aggregate ways of measuring performance of the miners, companies that have done their homework, which is improving earnings over time, have done very well. I can personally speak about, let's say, my portfolio, either at Crescat or personally as well. Yeah, the best investments we made outside of some public ones that did very well was actually in the private markets, where despite the fact that you're not seeing this the revaluation that you would expect, like you're saying, with miners, going up significantly, you do have access to the cash flow in a big way. And these companies are expanding margins quite significantly. Like you're able to buy a company, the 5th largest silver mine in the world, trading at 1x free cash flow. So, these things, they don't happen very often. And I like these types of deals. And so that's why they make it a little easier to, on the weighting side of the thesis. The fact that the public markets are not seeing yet the opportunity, it's fine by me. I mean, it's, I've been trying to accumulate as much as I can. Now, what I can tell you is that in the private market, things have been getting quite competitive, and it's been changing the dynamic in a significant way in the last, call it 12 months or so, where there's been a lot of more groups trying to compete with you when you're trying to acquire an asset. So that's something interesting that usually tends to lead, to a bidding war of assets overall.
So apparently in the private markets, there seem to be more interest coming into miners and companies in the commodity sector, which is not reflected on the public side yet. But when we talk about gold and the valuation of gold compared to the M2 supply, which I think is a better reference to actually value an asset than just plainly against the US dollar, because it doesn't make sense at all. But which party or which countries do you expect that are going to expand their gold on their balance sheet in the coming years, so that there is so much buying power going to occur to put gold back onto neutral levels against the M2 supply?
I think the U.S. is going to have to step in. I think either from a form of revaluation of the gold that they own at a much higher gold price, assuming the U.S. knows that they have a lot of gold in their balance sheet relative to other countries. I see no issues of why they would not just revalue gold at a much higher price and making it more expensive for everybody to accumulate the metal. That's one way where things can play out, which I think is highly possible. I think we're in the middle of a lot of radical changes in policy making, and that's a very, very possible route. Outside of that, I think most economies, like either the authoritarian regimes and the countries that are also have very strong current account balances that are surplus, are likely to be accumulating gold rather than treasuries over time. And there's significant amounts. I mean, China alone making $1 trillion in current account surplus. What are they going to do with that $1 trillion? There's a lot of options there. China is a little bit of in a different stage of things in my view, though. If I would point out to one place that I disagree with a lot of the gold bugs, and that China is playing chess while everybody's playing checkers and so forth, I actually think China could actually cause one last spike of the dollar before a final peak. And that is just because I think they are facing a real monetary issue. And it wouldn't surprise me if they suffer from a devaluation at some point. So that's I pay attention to that a lot. But most economies are going to be forced to buy more gold, because ultimately where we are currently in terms of stability of monetary systems are starting to show issues, and enhancing the quality of international reserves is likely to become a real thematic approach by most central banks. And they're going to have to make a choice of what are those assets that they should hold to improve the quality of their international reserves to back or anchor their currencies. And I think gold's going to play a major role in this.
I'm very happy to announce that I'll be a speaker at the Paris Blockchain Week, one of the biggest events in the crypto space throughout the year. And I've quite often said that if you want to learn more about crypto, events in real life are the place to be. And that's why we have a little surprise. We've got 10 pro tickets that we are able to give away to you completely for free. The only thing you need to do is to sign up in the form beneath, and then the winners will be randomly selected, and maybe we're going to see each other in Paris at the event. Salute!
I think you're touching upon, two key topics there. I think first one is probably Donald Trump and his aggressive policy going into 2025, which is also going to influence China in the sense that if Trump is going to put on tariffs on China, probably China needs to respond by devaluing their own currency, which in general, they don't have that much space anymore to actually do that technique or tactic at this point, as their own internal domestic economy is just falling apart. How do you see the role of China going forward changing in terms of Trump being in the White House?
I mean, he's forcing China to become less of a manufacturer, more of a consumer. So that's a change in their economic model in a big way. And I'm not sure that happens in an easy way as well. But the whole world is shifting away from China, and it's been happening for the last few years. Um, and and I think that's one of the main reasons why inflation is here to stay. Is because the era of having such a low cost of goods and services is behind us, and so we got to prioritize uh, you know the our country's manufacturing abilities, and so these things happen over time, and so I do think China is going to be in a difficult position. I've never been of the view that China was the next place to be. I've always been the view that China was closer to implosion than anything else. I think we've seen a lot of that already. I don't want to be overly bearish on it as well, because I think that the timing to be bearish was 5 years ago. But I mean, it's a real geopolitical threat. That's for sure. And I think China will be forced to do things in other countries, regardless if it is building manufacturing plants in places like Mexico, which they are already doing it, and so forth. And I'm not sure how that's going to play out with Mexico themselves. But things are going to have to change from a. I think currently nobody is looking to allow the way things are currently to remain the same for the next 10 years. And so clearly there's a major push politically and also economically to avoid that the world is going to look like this the next 10 years. And so I think there's going to be a lot of changes in that front. So China is going to be in somewhat of a difficult position, I think. It wouldn't be the best place for me to be bullish on. Again, I'm not bearish as well, just because it's come down so much. So from a trading standpoint, it's hard to be bearish on it. But I think there's other places to me that look more attractive than China.
So I think in a little bit we go back towards commodities, but when you say you're not bullish on China, I mean, it's the second largest economy. And it's basically the reason why the dollar is so strong is technically because of the Chinese renminbi and US dollar exchange rate just having a certain value. So if that changes, or if that pendulum changes, isn't that going to have such a big impact that the US is just going to be seeing a correction, or at least capital flowing out of the country, and the first country they go to is the US? Or is China, sorry.
I don't think capital will come out of a rule of law country to go into an authoritarian regime when there's plenty of options out there to go into. Really don't think that's going to be the case. But maybe I'm missing something, but I really feel strongly that that's not going to be the case. I mean, I think investors are very much aware of the issues with the Chinese Communist Party. There's really no rules at all, and so again, I really don't think that capital will be overwhelmingly going to China. Like, really don't think that's going to be the case. But yeah, again, maybe I'm missing something, but
No, I mean, there are just different opinions, I feel like, in the market, which is completely normal. And I think that's also the case when I look at the crypto markets, for instance. And I think we're going to talk about Bitcoin as well. Um, but when we go back towards gold, we have been touching upon miners, junior miners as well. They have been structurally underperforming, and you've explained it fundamentally. Um, but what do you expect in the coming, let's say, 5 to 10 years from that particular part of the market? Is it just a higher beta play on gold?
I think at some point it will be. Right now, you have to be very selective in what you own. By the way, if you ask me, I thought we would already been seeing this beta play on miners playing out currently, but it hasn't worked out. And I think that the ones that have done well are the ones that have fundamentally improved their businesses. And there has been plenty that have done that. I think that I think margins are going to expand quite significantly over the next few years, and mostly because of the underlying price of gold, but also I think people are also very reluctant to think that these companies can become slightly more productive and efficient. And from what I'm seeing of companies that we run, um, it is rare to see, like, we've made a change in one of our miners where, we spent about like 15-20 million dollars, the company spent on a few changes to improve operations, of which immediately translated on somewhere close to $100 million of NPV. So hey, I just don't see a lot of companies that have that type of, and it wasn't something really out of the normal what we've done. Like it wasn't like, a lot of critical thinking necessary for that. It was very logical and, somewhat of a obvious path to take. And so I'm a little surprised of how little capital can have so much impact. But of course, it's very asset dependent. You got to know what you're doing. There are companies that are just very difficult to make money. And yeah, I mean, I'm just, I view this the same way people made a lot of money with real estate back in the 90s, and levered up during that time, and then saw depreciations in the 2000s and so forth. I think that's the same here with the miners. And I'm trying to expand that my portfolio in terms of owning things as much as I can before things start moving. And it's not easy, buying these mines. There's so much complexity on understanding a mining company. There's so many issues that come with it, but it's, when you get it right, it's worth it. So yeah, I think it's one of the few macro ideas that I had that I have extremely high conviction on, that I really think that it's a time to be doing that. So I've been doing this for some time now, and I'll probably be doing this for another 10 to 15 years.
Just like, the question that I get out of this is just, if this opportunity brings this data, why aren't there more parties at this point jumping into those markets and competing with you on those companies? Is it just, maybe you've answered the question yourself, but is it just because it's so complex to acquire a company, or is it a very boring market that people or participants just don't want to join into it?
I think you answered part of it. Yeah, I think the boring side of it certainly is a big part of it. I mean, good luck telling the crypto investors that you're going to invest in a in a mining company, it's extremely boring, right? There's not much going on, but um, it's there's other aspects to it too. I mean, if you look at the number of undergrads and graduate students that are studying geology, for instance, it's been in a gradual long-term decline over the last, call it 10, 15 years. So labor in the space has been, very difficult to find, which, depending on what part of the mining space you're in, especially in the exploration side, it has been directly impacted by that, because very few people, like I can't even, call myself an expert of this, because it's extremely geological, technically, work for to be able to understand if a company has a a good or a bad deposit of gold or of a certain mineral, because it's so dependent on the technical work, and so the shortage of that is certainly, I think, one big aspect of why. I think that the fundamental story of the last 10, 15 years also doesn't help. These companies have not made much money, and so the easy route is to say that they're going to continue not to make any money. But if you study history again, and you study the times when we had inflation, these companies can really make a lot of money. So I think this is a very particular time that we're living in, that we may see capital finally flowing back to this industry. And plus, I love investing in things that have kind of like a legacy business, like a business that has always been around us, always, that has lost interest recently from investors. But that has happened before. It's not the first time. But it just seems very immature of people to think that that's the end of an industry. Like, look around you. Like, how do we build homes without mining companies? Like, or how do we do with new electrical grids? And you start thinking about from that perspective. It's like, it's hard to believe the mining industry overall will go away. I mean, it's just impossible. So I'm of the view that this is a true legacy business that is suffering from lack of interest for many reasons that I pointed out. But I do think that things can change as soon as the margins begin to improve, and also we start seeing, how critical this industry is to the functioning of the global economy.
I think, well, when we talk about crypto investors, yeah, most of them are currently seeking for the new meme that probably gives them a 100x. But I'm one of the boring guys that actually says, well, probably you need to have some gold and silver in your portfolio, because the volatility of crypto is just bananas usually. And it might not even yield you the best return at all at the end of the day. When we talk about commodities, we also need to discuss silver. In terms of boringness, that has been going sideways for how long was it? And finally starts to pick up some momentum. Where do you put silver when it comes to the coming years?
It's probably one of the most important macro assets. I mean, there's nothing more interesting than something that has been boring, in my view. I think that's the beauty of macro in a lot of ways, is to be able to identify those trends. And if you are of the opinion that gold is likely to be a lot higher, which I am, it's hard to believe silver, it won't follow along the same path or really outperform. I think we're going to see silver prices that we've never seen before. And hence why I wanted to buy a silver producer. So I've been very focused on that, and it's very difficult to find good silver uh, mining projects out there. But silver is a metal that is part of a lot of things, not only a monetary metal, an inflationary asset, but also is part of, solar panels and the green energy, green revolution idea, but also the onshoring and all sorts of things. If we're going to use solar panels, for instance, I just did a quick calculation the other day on Elon Musk's idea of going into the desert here in the US and putting on a massive field of solar panels. And I calculated how much of silver would have to be required to do that, to then be able to use it for the entire United States. And the answer for that was about 5 years of annual production of silver. So just to give you some sense of you know,
It's
uh,
creating its own supply shock, basically.
yeah, I mean, but that, that's not on the price, right? I mean, the price is really moving because of monetary reasons. And so if the industrial side of it starts to really weigh in, things can get really interesting. I mean, so yeah.
Are there, when you talk about at the beginning of this conversation, you mentioned natural resources and commodities in general. I do have my own preferred commodities as well, but I was wondering, outside of being into gold and miners and silver, are there any other commodities that you think are going to do well based on monetary reasons or just because the world needs it?
I think natural gas is a very important commodity for the near term in the US. I really like zinc uh, as a
Right.
commodity as well, um, because there are very few good mines in the world, and it's something that is extremely industrial, and there's enough demand for it, and securing good supply for it is key. Um, I think manganese is also another one that people have not really been looking at over the last few years. Uh, and other commodities that I think could do well. I think we're in a rotational period of commodities,
Mm.
and that's kind of how things work in the commodity space. One thing is the hot thing, and then turns out to be the next hot thing is something else, and then they keep rotating, and the other one collapses and just keeps moving forward. And so looking from those lenses, you have to pay attention to copper very closely. Copper is one of the most important commodities to own, in my view, as well. I think it's going to be trading at extremely much higher levels than what it is today. It's definitely part of my focus. I like metals just because they have a long duration aspect to it, and it's going to take a long time for us to see new supply coming online, and so the trends tend to take longer to develop. Outside of
Let
that,
me
yeah.
let me let me just like I have been watching the uranium chart, and I'm a very technical trader, so I don't have an explicit fundamental thesis behind it. I was just gonna ask you what your opinion is about uranium, which is I think there's the global uranium ETF, which is pretty good, has been doing really well over the past few years, to be honest. Um, I think that is not a bad bet to have in your portfolio.
I don't disagree. I agree. I think that's but also requires you can just own uranium itself, but
Yeah, it's hard to store.
the
That's correct.
yeah, and I I think the difference is that, why do I emphasize others like gold and silver and copper, especially gold and silver versus uranium, is because the supply side is very different. There's enough uranium in the world. There's not enough gold and silver in the world. So the supply side of the thesis checks a lot more than it doesn't mean it just means you're more dependent on the demand side, which to me checks quite a lot on the uranium side. All I'm saying is I emphasize those two more because clearly the thesis seems more complete, but I think uranium is a very interesting bet for sure.
And well, I'm happy to hear that. But when we're talking about bets, and you mentioned that well, you're relatively young compared to most investors into gold. But I have to ask you, why not Bitcoin?
Um, I'm not a guy who likes new things in general. So I did invest in Bitcoin before, and I invested in Bitcoin when it was about 3,000, and then I sold it when it was about 30,000, and never thought it would be, literally when I sold at 30, it went to 60, and I was like, whoa, that was a miss. So look, I think all investors have a blind spot. I have a blind spot with technology. I really do. Like it's not my thing. I don't see the opportunities that way very well. I happen to have a better betting odds on like legacy businesses that are likely to see structural changes that are not reflected in the price. So, and I think despite the fact that what's happening with Bitcoin is incredibly relevant and important, I never thought it would be as relevant as it is, but it is. I mean, it's I don't think we should ignore it. I mean, it's very relevant. However, I think there's also it's also funny to see that how many people have been dismissing. Again, I don't invest in gold itself, right? I mean, I'm looking for things because I do think gold is going to go a lot higher. But the chances of me as a young guy to make lots of money buying gold it's not where the game is. No, the game is on buying a company for cents on the dollar that could be worth 20, $30.
Mm-hmm.
That to me is where the money is. So I've done a few of those and I want to do more. And I don't think people are paying attention to this because they're just, they're focused on, well, look, but the other market is doing very well. Who am I to say that they've not, I mean, markets are fair.
Mm-hmm.
So I'm just focused on something that I literally have, plenty data to look over. And if Bitcoin ends up being the right thing, I missed it, I guess. I didn't put a lot of money on that 3,000, by the way. It was not enough to be happy about it. But yeah, I don't, I don't have any strong feelings about it. I think it's somewhat connected to NASDAQ. Highly connected to NASDAQ in my view. I wonder what this is going to go if NASDAQ ever doesn't do well.
Mm-hmm.
It's a true concern. I don't know. I'm just, just given the correlation it has. So yeah,
It's
but nothing against it. Yeah.
It's interesting because what you're doing in the commodity markets is what I'm doing in the crypto markets. I don't own any Bitcoin because if I would buy Bitcoin right now, it's never going to bring me the financial liberty that I'm looking for. So I need to go into the dungeon of finding the actual utility coin or altcoin or whatever there is out there to make more Bitcoin. And there are actually charts that I can just value the asset against Bitcoin and see whether it performs well. So basically having the same sort of strategy. But I was wondering, I mean, gold has its certain specifics when it comes to being money, hard asset, sound money, but Bitcoin has it too. How do you look at it from that perspective and just leaving technology behind?
Well, leaving technology behind, I think the big difference is
Is technology, that's true.
well, no, I would go back to the credibility and the history of one thing versus another one that has, call it 15 plus years, 20 years of history is different, right? I mean, it's something we need to be waiting on. There's also a reason why Bitcoin's so volatile too. I mean, gold used to be volatile as well when it was at its earlier periods. But gold is such a, I find it so fascinating when people say that gold is useless or something along those lines. It's the most useful metal that we've ever seen, and it's so useful that it became a currency. And it didn't become a currency because it's shiny. It became a currency because it could do everything, and because we couldn't find enough of it. Otherwise, we would be using everywhere. That's how useful it is. It's actually the opposite of that. So, and I'm talking about industrial purposes, like, and let's ask the question about Bitcoin in that case, right? What does Bitcoin offer that gold offer in that front that is intrinsically actually important for society? From that standpoint, we're not talking about monetary. We're talking about, using for whatever it should be used for. And I think that's, maybe it's been ignored. Certainly not by central banks, which is interesting. But yeah, I mean, if it's I have nothing against Bitcoin. I was making sure I put it out there, but it's I think I like to take clear bets in terms of ideas, and I think because of this skepticism towards gold from most people, despite the fact that gold prices have been rising, it's reflecting in a significant way on things that have leverage to gold usually. And either gold needs to fall to catch up to that, or the other way around. And I don't think gold would be trading at 2,700 in 5 years from now. I think wouldn't surprise me if it's double from this. So if I'm of that view, then I think that the miners are probably going to go crazy. So yeah, that's basically the idea. But I hope you understand what the difference is. I intrinsically, gold's extremely useful in many ways, and we can talk about monetarily and all the stuff that are different between gold and Bitcoin. But I don't remember who said this, and I thought it was very interesting that the fact that gold is the thing that is probably most out of the system that you can think of, right? I mean, you literally cannot trace it at all. It's like, if I exchange it with somebody else, nobody else will be able to know of that transaction. So it's in a world that we're living in. I'm not suggesting we're going to go back to exchanging gold bars and all things. I really don't think that's going to be the case. But
during these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they're giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.
It's the opposite with Bitcoin though. If we do a transfer, everybody can check that actual wallet if they know that that wallet is linked towards either you or me.
yeah,
And yes, you're right. I mean, gold is being used for so many things and Bitcoin hasn't been used yet, but there are a lot of similarities when it comes to the volatility and the growth path that Bitcoin is going through when gold started to be traded publicly as well. But there are a lot of like discussions, and I do not understand why there are so many people within both of the communities attacking each other, because they are so nice to have for both parties together, in the sense that gold is just the old productive one out there that is sound money, and Bitcoin is the new fashion that is easier to transfer, easier to divide, all those things that gold doesn't have. I
Yeah.
mean, what would you say about that?
I think maybe it's only natural to see the fact that people feel a little bit angry about either gold or Bitcoin, just because of, they're competing for a certain amount of capital. And I guess ultimately, what Bitcoiners see as the way to go is if we start seeing people moving away from gold, that capital would finally really come into the Bitcoin space. And the same thing with the gold space, of which, most of the gold bugs think that Bitcoin is sucking most of the interest from gold. And, these things are, I think it's been real. I mean, it's been happening. But yeah, I think we can live in a world that both assets would coexist. I think we will live in a world that both will exist. I think that the gold bugs need to be open-minded about the existence of Bitcoin, and I think that Bitcoiners need to be open-minded about, or not have the hubris to think that just because a new thing came in, that gold is, after I don't know how many centuries of being used as money, will now be irrelevant. I think that's also not going to be the case. So, yeah, I mean, it's yeah. I mean, if you go to a bar and people were talking about, I'm a type of investor that if you go to a bar and people were talking about, buying gold mines and all sorts of things, I'll probably be looking at Bitcoin. And it's not what I see, right? I mean, I don't never go to a bar or a restaurant and hear people talk about that they're looking into mining companies and all sorts of things, or gold or silver, anything like that. So that makes me, investing is all about not being right today, but being right in the future. And, that's the bet that I'm taking here. And that's why I prefer that route a little bit more.
I mean, I think a lot of people try to make a lot of money with Bitcoin or any altcoin that's out there, which is, for investing into gold, it's normally not really possible. But then all of a sudden, Mr. Orange Man Donald Trump comes around and announced an ID for a Bitcoin strategic reserve. Where were you when you heard this, and what was your first thought going into that news item? Instead of a gold strategic reserve, or at least stating that he wants to have a Bitcoin one.
You know, generally, the first thing I thought was interesting, and also, are we hiding the big thing by showing this? Because if you're serious about truly accumulating something to improve the quality of your reserves, to enhance again the reserve status and all sorts of things, would you announce to the world, are you going to accumulate gold and then accumulate gold? Or would you just accumulate gold and then announce to the world, we just accumulated, this much gold recently? I think this from an investor standpoint, right? When I hear investors, they're always trying to get the cheapest price on things. And so I don't really understand why anybody would announce to the world like that if they're that serious about anything. That's my 2 cents. That I'll be very I'll have my reservations on that aspect because of that. That doesn't mean they're not going to do it. I think they will do it. He said it many times, but does that mean that he doesn't like gold? I don't think so. I don't think that's the case either. So it's just that's a different story. But more importantly on that topic is the whole thing about his meme coin and all that he created before. And I think that's crazy what's going on. I mean, how he became the largest, crypto billionaire in potentially in this market like that. And the amount of wealth created like that.
Mm-hmm.
Think about inflation, right? Like think about, how incentivized this guy is to make this whole thing do well. It's kind of insane. So I don't know. I
It's
mean,
just I already forgot that he announced his own meme coin, but yeah, that went to like, what was it, 80 billion the days before he got into the White House. And then also Melania announced her own meme coin, which if you have a rational view, it's just literally insane that you have a president announcing their own meme coin.
it's insane.
It's just ridiculous.
I don't think we've ever
But
seen this before, ever.
no,
Yeah.
but it's also beautiful that you have a open source decentralized space where people can do whatever they want. But you should question whether a president should be allowed to do this.
No, should not be allowed to do it. I mean, I don't. I mean, it's the same way Nancy Pelosi shouldn't be allowed to do what she does, right?
Also
I mean,
true.
and all the other Congress members that have been doing things like buying stocks before knowing what changes would be made on things in general, or the Fed members that bought stocks before before the Fed announced QE. Like, come on. I mean, that's absurd. So, look, there's a lot of issues there, but the most egregious one has been, without a doubt, Trump. I mean, he made, whatever, how many billions of dollars he potentially made on this. And, think about the risk of people manipulating his views on things because they're going to invest in his coin oh boy. I mean, I can see this taking a direction that is just not pretty. And I don't think this should be the focus of the president of especially the U.S. I think that's a bad look personally. I was not happy when I saw it. I think everybody's super. Trump likes to push things to the extreme. He realized everybody's so happy with him and his approval rates are so high. He took advantage of it, and people accept it. Look, I mean, like you said, I don't even remember. Yeah, I don't disagree with you. Like, nobody's talking about it anymore. Like, this meme coin, I don't even know where it's trading. I do
think
know
it's-
that. What's that?
I think it's it went to like $80 and then it's down, I think 75%. in just 2 weeks.
Oh, it is down
Oh,
75.
yeah, since it's high.
Okay.
It's trading around like $20 or so, which shows the dynamics of the crypto markets, but also how fast things can just pass on, in our markets at least. But it's still ludicrous, and it puts crypto and Bitcoin as a whole into a corner that you don't want to be in.
Yo, look,
And I
Scott,
think,
I'm sorry to cut you off, but Scott Basson, right before he got, uh, the nomination,
Mhm.
he sold his entire $500 million of portfolio that he had. Like, you know, um, so it's a little strange what's going on. I have to say, this is not a pretty
no,
scene.
and for me, as a crypto investor and as a crypto trader, I was caught by surprise, and I'm also not favoring any of this sort of maneuvers that a president is having when it comes to a technology that I really think can go on in the coming years to become relatively large. So I don't know what his agenda is. I don't know what he's going to do. He's buying Ethereum at this point on a constant basis and millions every day. I don't know what his plan is. Uh, it's a little strange and a little, yeah. I'm maybe even feared on to see what's going to happen in the coming few years when it comes to crypto and his agenda. But we'll see.
Who is buying
Um,
Ethereum, you said?
he's got his own World Liberty Fund, and that fund, you can track the wallet. So Trump himself or his association is buying Ethereum on a constant basis.
Wow. Is
Uh,
that a significant amount?
10 million a day. And actually, on the day that he got into the White House, I think Eric or Donald Trump Jr. tweeted that they bought 48 million into, or 47 into Bitcoin, ETH, and then another 4.7 million into like 3 or 4 other altcoins. So their entire stack at this point is, I think, around 250 to 300 million into crypto, and you can just track it out there. It's just public.
Wow.
Yeah, I mean,
That's scary, man.
I just don't know what to make out of that. So I would be happy to have a portfolio that's not really consisting of crypto alone in the next few years. Uh, but for people that are listening to this podcast and are listening to you, it's a very tricky market where a lot of agendas are going around, and it's very hard to stay sane. How would you describe a, well, let's say, plan going into the coming years where very likely volatility is going through the roof? Um, you're going to see sentiments flip around a little bit. What would be your advice to anyone who's listening?
I think the best advice I have on that is, but I will explain this because it's going to be so cliche what I'm going to say. People say usually do your own homework, right? And it's like, but they don't explain why, which is so important. When you study something, or let's say the mining industry, like I've done for the last few years, and you're in a situation where the public markets are just not responding to how you thought it would, what do, right? If you have not done your homework, you're probably likely, let's say you heard this from somebody else on Twitter or X, you probably going to, try to get in touch with that person, either messaging them or commenting on things and, whatever. But you're in a position where you want to know if that person has changed his view or her view from what it was before. And when you have that conviction of which you've done your homework, you've done all the work, and the price of an asset goes down, you feel confident to come in and take advantage of it. So to your point of volatility, the real money is made on situations like that, where you have these types of dislocations in markets, and you come in and you buy, and you buy more. Markets is the only thing that I know where things get into a discount and people run from it, and they instead of run towards it. And it's funny. I don't really understand that. So I think once I establish my homework and I do all the high conviction ideas I have, and I really try to act on volatility events when possible. That I think that's absolutely key to your success. But who am I to say something? I mean, that's just my 2 cents on this. I've tried never to be dependent on anybody else's views. Otherwise, you're in a position where you're always asking that person, what do they think about this or that, rather than, uh, you know, rather than trusting yourself. So, and trusting yourself and to act on those difficult moments is going to be what makes a big difference from a compounding standpoint over time. So yeah, I know doing your homework is not the best answer, but I think there's a nuance behind it of why it's so important.
And when we talk about the coming years to come, I mean, I think it's very clear that gold in itself, but also miners, and for the people that are listening, they should really look you up on X. I think your charts are great. They are very leveled, which means that people can really learn how to digest the data out of all those charts, which you're doing, which is great. But when we go into the coming years, where gold is likely going to do well, miners are going to do well, crypto is likely going to do well for at least a short period of time. There are also going to be cases where we are getting into a recession where everything just dumps or goes down, and even gold has its correction. How are you going to tackle any of these sort of extreme situations where a lot of emotions come into play, a lot of panic comes into play? It's very likely that in the coming few years we're going to have one of those years.
Um, I think the best thing I can do is uh, there are ideas that I have in my mind of things I would like to do if those issues happen, and there's like a desperation moment in markets. Like acquisition targets that I don't think would be sold right now, but could potentially be sold under stress. Those are things that I really try to plan out ahead of time. And if it's just volatility because of what you said, I mean, it's something you just gotta, wait for things to come back to normal. There's not much you can do. You can try to time it. It's very difficult. Majority of my things are private, so it's hard for me to really time these things, because does that mean I'm selling my private? Like, I can't sell it. So, well, then, so it's tough. So I'm not sure I can really weigh in on that side of it. But from a macro standpoint, if you take a view of 5 to 10 years, it's a lot easier to plan things ahead. So if gold goes down 20% or 30%, which could happen in the next 2 years, you should be buying with both fists, right? I mean, that would be an incredible trade location to be coming in. But I think unless there's other external factors I'm not aware of right now, but that would make a ton of sense to me. So yeah, so those I think yeah, I always think about these things, like what would I do with this company that I own if it falls 30% tomorrow? Would I just sell it, or would I just hold it? Would I buy more? I'm always constantly thinking about these things, because they could certainly happen. Like these things can happen anytime, and the only way to be able to make the decision from a capital standpoint is again going back to conviction. Is by having a conviction to act on it. So having a long-term plan helps a lot.
I usually have the tactic, or at least what I'm saying on my channels, is that if you hold a position and it goes down 50%, just look at the chart like if you don't have any position and ask yourself what would you do if you see those charts. And if your answer is I would buy the actual asset, then if you have a position, you need to hold it. And actually, if you have the ability to do so, add on that position. But when emotions come into play, it's more complex than just reading a chart at the end of the day. Are there any final notes you would like to share with the audience, or where can we find you? The links will all be in the description, but
Um, well, no final comments, but you can always find my work in Crescat.net. I put out a lot of letters and research there. I also do a lot of posting on X. At Tavi Costa is my handle, and where I tend to share some of my views on the markets and so forth. So you're welcome to follow me there. But thank you again for the interview. Appreciate the time as well.
yeah, and once again, I said it before. Thank you very much for the content that you provide out there. I'm still a learner, and I'm seeing a lot of unique charts and content being pushed out there from your side. So thank you very much, and also thank you for being here in our show. Looking forward to seeing what the years are going to bring, and also good luck with everything that you do at Crescat.
Thank you, and you as well. Hope everything goes well with your investments and life as well.
Thank you.